Today we're talking stocks, and I'm going to give you my top 3 picks for December of 2017. Stay tuned. Welcome back to Whiteboard Finance. My name is Marco, and I'm here to help you master your money and build your wealth. Today we're talking stocks, but before I get into that, I want to get into a couple reasons on why you should even be listening to my advice in the first place. I've been investing in the stock market since I was 18 years old. And I hate to say it, but I'm now 29, so I've had about 11 years of experience. The good thing about that is that I've experienced both bull and bear markets. A lot of people that have been investing over the past 5, 6, 7 years, they've only known a bull market. This bull market has lasted about 9 years, and this video is being recorded at the end of November of 2017. So essentially, people think that they're geniuses if they've never taken a loss. Well, it's been pretty easy to be a genius the past 9 years. I remember the losses from 2007. I remember the losses from 2008, and I know how to compensate for that and how to adjust my portfolio accordingly. In terms of living through both those markets, I describe myself now as somewhat of an aggressive investor. I do enjoy growth stocks, but at the same time, I am somewhat risk averse. So I'm the guy that's going to look for doubles and triples. I'm not necessarily going to go for those home runs or grand slams, even though those have happened in the past, especially over the past couple years with tech stocks. I'm not going to be chasing those gains. I like to look for medium to long-term plays, and those are the plays that I'm going to be talking about today. Stay tuned, guys. Let's start with number 1, Home Depot. Now, you may be thinking that this definitely isn't the sexiest pick in the world, but I'll tell you why I think it's a great pick. Home Depot is the world's largest retailer of home improvement goods, and they have about 2,300 stores in the United States, Canada, and Mexico. I'm familiar with Home Depot because I'm a real estate investor myself. I have 3 rental properties that received significant improvements, or they were built ground up using most material from Home Depot. I have a lot of relationships with subcontractors and builders, and 90% of the time we end up buying stuff from Home Depot because it's the best quality and it's the cheapest. Pricing is cheap because of scale. They're almost like a Walmart where they can afford to negotiate prices down with all their vendors. The vendors are in their stores because they know they're going to sell more volume, so they give their products at a lower price to Home Depot. Their main competitor is Lowe's, who in 2017 did about $68.5 billion in sales. But to put that into comparison, Home Depot did about $100 billion in 2017, so that's a significant difference. I feel like Home Depot's stock price is fairly valued because right now it's at a 24.1 price to earnings ratio. The nice thing is that they actually have increased their dividend year over year. Right now it sits at about 2%. And if you actually choose to use the DRIP program, which stands for Dividend Reinvestment Program, you can actually build up your shareholdings in Home Depot pretty quickly here, guys. Home Depot has consistently surpassed the industry average in revenue growth, net income growth, operating margin, net income margin, and return on assets. So take a look at this chart. You can see that every year they're beating out the competition pretty significantly. This keeps them an industry leader. But you also have to realize that since Home Depot is a market leader in a mature industry, it makes it hard for the company to find new growth opportunities. As I mentioned earlier when I started the analysis on Home Depot, this is not going to be your 20-30% gainer. It's not going to be an explosive stock because it is an industry leader, and it's been a mature industry leader for a number of years now. However, it's going to be a solid single base hit or a double at best, but it's a great mid to long-term hold for 2017 and throughout 2018. Number 2, Nvidia. Nvidia is a really exciting company, and a lot of people are drawn to these tech companies that have a lot of potential in the future. The reason they're so exciting is because they play in 4 really cool segments. The first segment is gaming. They improve graphics through their GPUs. Essentially what they do is they produce graphics cards for video game platforms, desktop computers, and pretty much any other component that needs graphical processing. The reason this segment has exploded so much is because of esports. There's now 350 plus million users in esports. And if you don't know what esports is, this is essentially video game competitions, if you will. So these are now digital athletes. But in order to power those video games at the highest level and at the highest frame rates, they need good graphics cards, and this is where Nvidia comes into play. Number 2 is their professional virtualization. This one I don't have memorized, so I have to read off my paper here. I apologize. Essentially, professional virtualization is enabling companies to design and manufacture products efficiently and to create highly realistically digital content. So what this does is more and more developers are using VR in their content, which requires professional GPUs. The third business unit is data center. So Nvidia supplies all the major cloud providers with its GPUs, and these high-performance GPUs enable thousands of artificial intelligence developers to rent computing resources by the hour, and they test their apps, models, and services on these virtual servers. And their fourth business segment is automotive. Believe it or not, Nvidia is actually involved with artificial intelligence for driverless cars, so this could be a huge opportunity in the future. Check out this graphic. You can see in 2016, the global games market is about $101 billion. Keep in mind, that's the net sales of the entire Home Depot for 2017 as well, if you want to make that comparison. But take a look at how it's growing from 2017 all the way to 2020. This is essentially going from $101 billion. Fast forward 5 years later, you're almost at $130 billion. This is a huge opportunity for Nvidia. Going back to self-driving cars, I really feel that self-driving cars are going to be the future. Nvidia already works with the major automotive companies such as Tesla, Audi, Mercedes-Benz, and Toyota. They also work with tier 1 suppliers like Bosch and mapping companies like TomTom. They're supplying many companies in the automotive space, and according to their CEO, they're going to have huge revenues in several thousands of dollars per robo-taxi. So I know that sounds like some futuristic stuff, you guys, but it's a reality that we're going to have to get used to. So let's take a look at Nvidia's fundamentals. Their income statement has pretty consistently grown over the last 4 or 5 years. You can also see their balance sheet has had a little bit of a rockier road, but is definitely still on the uptrend. And also their cash flow statement has increased as well over the years. One of the biggest risks of owning Nvidia is that the landscape or the environment is always changing. Technology changes at the speed of light. However, it does take many years to develop their GPUs. So this could actually be somewhat of an imbalance, or maybe even be a lag in technology versus what people actually want and need. That's one of the biggest risks I see for Nvidia. But overall, there's huge upside with artificial intelligence, self-driving cars, and also a lot of visualization, which we mentioned earlier. So ultimately, this is another one of my picks for December of 2017, going into the medium to long-term hold for 2018. Number 3, Microsoft. My third and final pick for December of 2017 is Microsoft. I truly believe in this stock because I work for one of the biggest resellers of Microsoft in the entire Midwest, if not the biggest reseller, and we are a certified gold partner with a lot of their products. So I actually work on the networking side, so I sell servers, data storage, Azure, things like that. So this is a stock that I'm very familiar with. Microsoft always gets overshadowed by the other FANG stocks. FANG stands for Facebook, Amazon, Netflix, and Google. And they've seen a huge amount of growth over the past 2 years. And they're also a great dividend champion, in my opinion. They pay a great dividend, and they've increased it year over year. The reason I think that Microsoft still has more growth and it's a good dividend play as well is because they're flying high on their cloud growth. So let me read this to you guys. In Q4 earnings call, Satya Nadella, the CEO, mentioned that the company's commercial cloud annualized revenue run rate, that's ARR, so that stands for how much recurring revenue you have every year, now exceeds $18.9 billion. That's on course to surpass their target of $20 billion in commercial cloud ARR in fiscal 2018. In Azure, so if you don't know what Azure is Microsoft's virtual servers. So if you're a business and you want to put your information on a server that you don't physically own, that's what Microsoft Azure provides. It's similar to Google's cloud services, and it's similar to Amazon's web services. So in Azure, they have a strong growth catalyst. Azure revenue grew 97% year over year in Q4 2017. So this puts Microsoft as the second biggest cloud player. I believe it's second to Amazon Web Services. Microsoft's market share stood at 11% at the end of quarter two, and Amazon Web Services is right around 34%. So what I will say is that I've been on these sales calls for Microsoft. I know exactly how their reps are getting compensated. Their reps are getting compensated so much more for selling cloud services than on-premise. On-premise is actually when you install, say for example, an ERP software, so software that helps run people's businesses on their servers. Microsoft is compensating their sales reps so much more to sell cloud services more than anything. So they're really making that push towards the cloud, which I think is the future in my opinion, and I work in the space. So take a look at this infographic. You have Amazon leading the way with Microsoft right behind. Then you have IBM and Google, and then essentially the rest of the market. So if you don't understand Microsoft's business model, they don't only sell, Windows, if that's what you're familiar with. They sell huge enterprise resource planning softwares. They sell Azure, which is what I sell, and they also sell Office 365, which is essentially the cloud version of Microsoft Office. Ultimately, I think Microsoft is going to end up somewhere in the $100 range for 2018, which is pretty significant growth from where it's at right now, barring any huge corrections. So I think Microsoft will be a great medium to long-term hold from December 2017 all throughout 2018. If that dividend keeps getting raised and the stock price keeps going up, hold on to that puppy and use the DRIP program. And there you have it, everybody. This is one of my first videos on picking stocks, so please go easy on me with the like button. If you got any value out of this video whatsoever, please subscribe below. I do have a question of the day for you. What stocks are you guys picking for December 2017 and beyond? I'm really interested to hear that, so please leave your comments below. Just a heads up, I do use Robinhood as my trading app, so if you want to learn more, there will be a link in the description below. Essentially, Robinhood is a commission-free brokerage, and they also have no minimum balances as well. So if you're just getting started with investing, Robinhood is a really good application to start on. It is mobile only, and they don't offer a desktop version yet as of this recording, but I think they will here within the next couple of months. So good luck investing, guys, and have a prosperous day. Hello? I'm just finishing up. I'm teaching the people how to make money. I recommended Home Depot, Nvidia, and Microsoft. Yeah, it's very good. What do you think about this, my love?
I think it's very good.
You think it's very good? So you did some research into all these companies? Oh, so you trust my judgment. Thank you. My wife trusts my judgment. Unbelievable.
I have dinner ready for you and bring the milk over there.
Okay, I will. Love you. Bye. Bye. My wife trusts me. This is good. So should you.